All right, thank you, everyone. Uh, this presentation here, I'm going to focus on in the financial reporting, the types of reports and stuff that accountants issues. Point out typically what financial statements are used for, and then also Form 990. For some of those, this might be very routine or very entry level, but I think it's good that we have newer people on the call to understand what the difference is here. The purpose of financial reporting is primarily to provide a comprehensive overview of the organization's health. There's the basic balance sheet, income statement. You would have a statement of changes in equity or statement of changes in assets for nonprofits, cash flow statement, and then notes. And the notes themselves provide a lot of detail about the numbers. In some cases, the numbers don't mean a lot, particularly as the organizations become larger. It's just a big number. You have to go into notes and read them, but it's to provide that overall financial health. And then, if we go to the next one, it's used by management, external donors, grantors, and other interested parties. Also, a big user of these statements are financial institutions, particularly if the organization has loans or bond issues outstanding. The bondholders, the lenders use that information to determine the financial health of the entity. They cannot or do not use the 990 because a lot of cases 990 doesn't provide the specific breakouts or groupings necessary to calculate certain ratios, such as current ratio, debt to equity ratios, debt covenants, whether being met regarding like a debt service coverage ratio. That information is all pulled from the financial statements, and it would be very difficult to pull that state information from the financial reports. Also, they're typically on a specific basis of accounting, either accrual basis, which would be generally accepted accounting principles, or also modified cash or cash basis. Typically, what I see is the smaller the entity, they usually use cash basis. As they grow, they acquire property, they start doing perhaps billing services. You see them switch over to the accrual basis, and it happens to be an evolution of growth with the entities. Some things to keep in mind regarding the type of reports that accountants issue. And I want to point this out because I see a lot of confusion on what people are doing when we're providing services to them. The highest level of service that an accountant would provide would be an audit of the statements. And in the audits, we're actually expressing an opinion on the statements. And that includes reading the notes and making sure the notes are correct as well. So it's what we provide what's called reasonable assurance. It would be impossible for us to provide total assurance or complete assurance unless we reprocessed every transaction, and that's not what an audit does. It's using a test basis. But in an audit, in the process, we evaluate the internal controls. We determine if they've been placed in service. In some cases, we test the operating effectiveness of the controls. We hold a conversation with management regarding whether there's any fraud, and with board members regarding any fraud. We're required to report if there's any internal control weaknesses. We assess the risk of material misstatements in different areas of the audit and perform our audit to achieve those objectives. So it's a high level of assurance. The next lower down or step down in level of assurance would be a reviewed statement. And in a review, we did not express an opinion. We express a conclusion. And it basically says that based on what we've seen, which was obtained through inquiry and analytical procedures, the statements appear to be fairly presented. If you were to look at if you drew a line on the left side had no assurance and on the right side had 100% assurance, an audit would be very near the 100% assurance. A review would be maybe a quarter to a third of the way toward assurance. And then at the far left is the next level I'm going to talk about is compilation, which is no assurance. Now, in a review, all we're doing or required to do is do inquiry and analytical procedures, such as asking the client whether or not they had a good cutoff of AR, but we're not testing that. Whether or not they had a good cutoff of payable, but we're not testing that. In an audit, we'd be testing those cutoffs to make sure that actually occurred. We do not assess internal controls. We do not assess areas of risk in the financial statements in conducting a review. And hence why we conclude instead of express an opinion. We're just saying, based on what we've seen, what we've asked, it appears it's right. The next one on the compilation state financial, in a compiled statement, we provide no assurance at all. We're simply preferring it based on information provided by management without any procedures. I call it the hear no evil, see no evil approach to financial statement preparation here for the organization. So now, if there's something, if we're looking at statements and perhaps they don't have depreciation recorded and they should, our professional standards would say we have to ask, hey, have you considered depreciation in these statements? Maybe it was no more depreciation, maybe they had forgot to do it. If something becomes obvious, we are required to go ahead and ask those questions and then follow up with the clients on that. But other than that, there's really nothing to do. Everything looks all right. We're done. We don't have to ask no questions. One of the favorite things I love to hear is our books are audited each year when our account prepares our Form 990. And I want to point out the preparation of a 990 is not an audit. It's not a review. It's basically a compilation. We're taking numbers and we're putting it on a form, and that's all we're doing. So there's nothing really provided there. The types of statements we have, if you want to go to the next slide, Christina, is I mentioned we have the statement of financial position for those of you in the for-profit world. Balance sheet, statement of activities would be the income statement. If we have the presentation of restricted net assets in a multi-column format, that's probably all we have. But if we use a single column where we have the unrestricted followed by the donor restricted, then we'd have a statement of changes in net assets. We have a statement of cash flows and notes. Now, keep in mind, a review or an audit would have to include notes to the statements. A compilation may or may not. The client could choose to have a no notes included, which is fine with the compilation. They're coming back to what I said, very limited, no assurance provided on that because you don't have notes. Now you might not even know what the numbers mean. And or they could have a full set of statements with a compilation, but they do have that option to include notes or not include notes here for the financial statements. Some of the things with the financial statements regarding accessibility, typically the distribution of financial statements typically is much confined than it is to a 990. As Krista had mentioned in a previous presentation, Form 990 is open to public inspection, but a lot of cases with financial statements is typically just the board members, maybe some funders or lenders that are asking for the financial statements. It doesn't mean that I don't have clients that put them out there. I do. We have some clients who post the financial statements along with posting their 990, but there really is no requirement for you to do that. Another confusion people have is we have a 990, we have to have financial statements. You do not. It's possible if you have no funders requesting it, no board members, no lenders out there, you can be a very large nonprofit and actually have nothing more out there than just a Form 990. There is no requirement in the IRS regs. Where this requirement of reporting comes in is usually related to the state's Solicitation of Charitable Funds Act. Based on the amount of money you're raising, you may be required to issue a internal compiled financial reviewed statement based on state requirements out there. But it's not the IRS requirements that would drive a financial report to be prepared. So if we go on to the next slide here, the Federal Form 990, keep in mind it's required by the Internal Revenue Service to report the fiscal financial activity, but it's really intended to provide transparency and document compliance with federal tax regulations. One of the things the IRS, see a question popped up there. One of the things the IRS relies on is public regulation of nonprofits, which means as the information is made public and made known, and now it's real easy. If you Google your nonprofit's name, you'll probably find several websites or out there which has the most recent copy of the 990 or some version of the most recent copy of the 990 out there. So it's very much accessible. When I started in my career 35 years ago, you had to actually either go to the organization or pay them to mail it or fax it to you. So it was not as easy to obtain, but now it is. It's on the internet out there. So keep that in mind. And the IRS intention was that public would look at these. If they see something wrong, they would contact the IRS and let the IRS know, hey, this doesn't seem right. And there's much more transparency now when they redid it in 2008 with the governance and the financial, the governance policies that are on there, as well as policies the IRS thinks are important to have in place here for the organization. Some of the things that are different here from the 990 and the financial statements. One, the 990 typically has a more detailed breakout of revenue and expense numbers, and you may find on your nonprofit statements. So now, small one, you might not see any difference. Large ones, there's a lot of groupings that tend to be combined in the other income or other expense lines, which would be broken out on the 990. One of the big differences, 990 requires executive compensation, wages and benefits to be disclosed. Not the case in a financial statement. That's no requirement for that. There's now information about governing practices that have to be listed in there. Also, one thing the 990 has that the financial statements don't, though the financial statements could, if you want them in there, mission and program accomplishments. And that program accomplishments are really important to highlight what the organization does to benefit the public. Also, disclosure in the 990 of lobbying and political activities, if you have any, and typically more disclosure of business relationship between organizations and board members and management. So, and in order to enhance that extra reporting, it's broken into several schedules. We have Schedule A through O, and then it's A through O, and then it skips P and Q and goes right to Schedule R. But each of those schedules have different things. Schedule A, if you're a C3, supports your tax exempt status. Schedule B lists the donors, and so forth in there. So there's a lot more information that's provided in the 990 here than what you're going to find in the financial reporting related to that. And keep in mind that the federal Form 990 is reporting for the IRS. It's not financial reporting. Sometimes lenders will ask for your 990 as part of the financial reporting, but probably they'd be more interested in a complete set of statements to do their analysis in the federal Form 990. Also want to just remind everybody there's different thresholds, requirements for different Form 990s. If your gross receipts are less than 50,000, you can file Form 990N or E postcard. Very simple. You go into the IRS website, you attest that your revenue is not over 50,000 on an average, 3-year average, give your contact information and submit it. Real simple. Also, if the revenue is greater than 50,000 or greater, and less than 200,000, and you have total assets that are greater than 500,000, then you need to do the Form 990 EZ. Still a very relatively simple statement, maybe about 6 pages long and a couple schedules. All others have to do the long form of the federal Form 990. So keep that in play and keep that in mind here. So that's primarily the reporting requirements here for the federal Form 990.